Hey everybody, what's going on? It's James here with Crypto Common Sense, and I've got your Bitcoin / cryptocurrency update for November the 15th. So it's just before 7:30 a.m. Central Time, which is about 13 and a half hours since yesterday's daily close. And I'm waking up once again a little bit frustrated with myself. I switched back to days a couple of weeks ago, and full transparency, I just haven't had the same trading success during the day that I have had at night. A lot of this action has been happening in the later evening U.S. time and in the early a.m. U.S. time, which is more like the Asian market and the UK stuff. So probably going to go back to working at nights, which is kind of a bummer because I like being up during the day, especially during the winter. I love winter. But yeah, last night was awesome. So let's talk about what's going on with Bitcoin, and we'll talk about some of the altcoins and try to get a feel for what is next for Bitcoin. Before I jump into today's content, please do me a huge favor. Go ahead and hit the thumbs up button on this video, and don't forget to subscribe to the channel if you haven't already. So last night, I went to bed early, but I was laying in bed getting these ding, ding, ding right on my phone, and I saw this setup coming in. I didn't take the trade because I didn't want to get up and have to watch it. But essentially, what we did was we fell down to this $8,500 area, and at the same time we were pinging the bottom of our descending wedge here that a lot of the bulls want to see break north, right? Right off the bottom of it, it was a false break below this 50-day moving average. It was a very, very easy long position to take if you were at your desk. And of course, after that popped, if you'd gotten in on the close over here, right at this 9 o'clock candle when it first, so this was the 9 o'clock 5-minute candle, right? So if you'd gotten in on this close, look at this, about a 3.3% jump. Hopefully you have been smart enough to take some profits once RSI on the 5-minute was up to over 90. It says 89, but you got to remember that's where it closed at. It would have been in the 90s when this thing was up in this wick. So even if you took profits in the close, would have been about a 2.5% trade. So, you know, if you're trading with, for example, one Bitcoin, that'd be like $250, right? Or well, $200 or whatever. Bitcoin's not worth 10 grand anymore. But you get the idea. It was a really, really good trade. I was really bummed out to miss it. And then again, it would have been very easy to go short here. And of course, on that dump, you know, it would have been about a 1.5 to 2% trade on the dump. So missed both of those. Very, very disappointed when I woke up and saw that. The good news is, you know, it hasn't done anything crazy. It hasn't done anything to completely shut down my bearish bias. So I want to talk about what it's doing here. Okay, so first off, on the smaller time frame, guys, this is what I'm watching for. This is our new Fibonacci level. Somebody asked if I could kind of talk about these in some of the videos. This is my new Fibonacci level on a day trade, right? So when you see these things in my videos, be very, very careful getting confused and being like, oh, okay, I'm going to open a short there and just ride it to the ground, or I'm going to open a long here and just ride it as far up as I can. No, these are day trades, right? These are 5-minute candles. So this isn't a very important level at all. Right? It may not get there, it may get there, who knows? But if it gets there, that's one of the first things that I'm going to look for, and then I'm going to look for other things to back that up to go short, right? 87.07. So as an example, 87.07, if I go over to this chart and I pop open a 4-hour chart here, this orange line is our 200 moving average on the 4-hour chart. Where is that at? It's at 8,692. So now I have, right, I have convergence. I have a 4-hour moving average, which is very important, the 200 moving average, and I have this 61.8 Fibonacci level on the smaller scale. So now I have two different reasons to take that trade, right? Ideally, I can find a third reason, but 2 reasons on a day trade, that's often enough for me, right? I can jump into a trade like that around $8,700. I can put a stop loss up above this breakout, right around 87.50. So if it breaks north of this thing, boom, stops me out, no big deal. Okay, and then I can look for my next entry. If it happens to find resistance at the 200, or it happens to find resistance at the 61.8, or it happens to find resistance at the top of this wedge and then starts heading back down, right? Then I'll look to write it down to the bottom of this wedge, right? This wedge is sitting down around 84 to $8,500 right now. And then you start looking at the big picture, and that's when you can start asking yourself, do I want this to be a day trade, or do I want to convert it to a swing trade? Now, there's a school of thought that once you enter a trade, you should never change your targets, and I'm going to call complete bullshit on that, okay? The reality is if you are entering a position as a day trade and it develops into a swing trade, why wouldn't you ride that as far as you can and take as much profit as you can, right? There's a really great book about trading. It's called Trading in the Zone. It's by a guy named Mark Douglas. It's really about the psychology of trading, and it talks about how as human beings, we always want to book the win as soon as possible, right? If we're up in a trade, we're always too quick to get out. But if we're down in a trade, human beings have a tendency to always stay in the trade too long, hoping that it turns into a winner. So what you want to do is try to reverse that. You want to try to cut your losses as quickly as possible when your trade idea is invalidated, and you want to try to ride your winners as long as the idea is still valid. So if I'm in a day trade and my initial target might be 1%, right? But if I see that, hey, look, it's just broke underneath this, 50 moving average on the daily, which happens to be around 85.57, well, then I might want to hold that and see if it can get down to the bottom of this wedge. Then if it breaks out of the bottom of the wedge, of course, I might want to hold that and see if it can break all the way down to this level down here around 7,500. And suddenly a trade that, started out as a, hey, I'm going to try to get 1% here, might turn into a 5 or 10% trade, right? I mean, roughly, if it dropped all the way down there, it'd be like a 13% trade. So that's how, you can take a day trade and turn it into a swing trade. Now, the danger is trying to take a day trade, turn it into a swing trade, and being wrong, right? So you've always got to have an invalidation point where you say, okay, this isn't going to go the way I think. I'm going to go ahead and take profits here, all right? Otherwise, your day trades will never make money. So, if it dropped 1% or 0.5% or whatever it may be, and I happen to be in that trade and it starts finding support on this 50, well, sure, I just go ahead and close it, right? Take $100, $150 profit per Bitcoin and move on to the next setup, okay? So let's talk about, what do I think is going to happen with Bitcoin today, guys? I just woke up about 20 minutes ago and this thing looks a little sketchy, right? And by sketchy, I mean it looks like it could go either way, all right? I do think that we're underneath this 200 moving average on the 4 hour. It's very, very normal to come back up and retest this from the underside. That's what's called a bearish retest. I've been trying to talk about that more in videos lately so people know what they look like. Let me show you a bearish retest. This is another bearish retest, okay? I posted this chart up yesterday on Twitter. This is a silver chart. This is not Bitcoin, right? Silver moved up. It had this descending triangle. It broke south of it. It came up, retested it. And when I posted this, we were just closing this green candle here. And if somebody had gotten into a trade, look at this. Boom. They're already up big time. Now, it's about 1%. You might say 1% is not that much. No, on silver, that's a lot. Okay? When you're trading something like a Forex, it's not like Bitcoin where you might take a $10 or $20 or $30,000 position, right? You may have a $200,000 position in silver because of the amount of leverage that you trade with. It doesn't move as much as Bitcoin, so it requires bigger position sizes, and that's why a lot of Forex sites will give you up to 200x leverage. So yeah, this right here could have been a $30,000, $40,000 profit for somebody, right, who is trading a decent size silver position. And if you look, gold is doing the same thing right now. Gold and silver are basically mirroring each other, which is funny because it's the same thing Litecoin and Bitcoin do often, right? So it came down, bounced back up. Here's your bearish retest. It failed. So right on the close of this green candle yesterday would have been a place to short gold. I know right now a lot of people are like, oh, gold, I'm going to invest in gold. I'm going to invest in gold. You couldn't pay me to invest in gold right now. I said this a couple of months ago and people thought I was nuts. I said it was due for a retracement, right? And it's down from where I said that. It's down like 5% from where I said that. So the funny thing is gold is not near as, indestructible, if you will, as people think it is. Just like Bitcoin is not indestructible. People think Bitcoin is going to go up forever. They think gold is going to go up forever. They think silver will go up forever. And these markets have proven time and time again that's not the case. So yes, gold right now, if you had entered it short on yesterday's close, you would have entered at 1471. Right now it's at 1466. Doesn't sound like a lot because we're used to Bitcoin. It's like, oh, $5, who cares? Well, let me show you, who cares? That right there is about a 0.29% difference. 0.29%, in Forex, again, that would be like, 2.9% in the world of cryptocurrency, okay? 3% almost. Huge deal. So that's kind of, what bearish retests look like. And again, that's what I think Bitcoin is doing right now with this 200 moving average. Time will tell, okay? If we look over at our daily chart, this isn't too messy. I'm going to get rid of RSI. It doesn't matter in this video. I'm going to get rid of volume too, just because it's, kind of cluttery. So this is the downward channel. Nothing's changed, blah, blah, blah. We're in the downward channel, right? We're just moving down. And basically this is our bear market channel. Once we break out of this, we'll be, quote unquote, out of the bear market, okay? I still suspect we're just going to come down to the bottom of this thing and test it, right? I think we'll come down, test it in the $6,000 range. We could get another bounce off of it to, destroy even more people, and then finally settle down sometime in, February down here around this. I'm hoping around $4,000, but bottom of this channel will be around $5,000. Typically, you're not going to stay in the channel forever. Eventually, you're going to break one way or the other, right? And if you break north, it's probably going to be a hard break because people are going to be like, oh, thank God the bear market is over. If you break south, it's probably going to be a hard break south because people are going to be like, oh my God, we're in a bear market, right? Typically, when you break south, that's about the time that your average retail investor realizes, shit, this is a bear market, right? Way, way too late, right? People finally realized that 2018 was a bear market right about here, right? Right around November. That's when people are like, oh shit, we're in a bear market. We'd already been in a bear market for 11 months. Same thing is happening with Bitcoin right now. We've been in this Bitcoin bear market since June, right? Almost 5 months later, right? I want to show you guys a post I did. I haven't checked Twitter yet today, so this will be fun finding out what all these notifications are. But essentially, this was the post I did, right? Remember when perma bulls were calling for new all-time highs in June, July, August, September, October, and finally this month in November? Yeah, me too. Bitcoin is down 37%, guys. Don't listen to these people, right? Use your brain. This is a bear market. We're in a downtrend, period. Okay? Until we break out of this trend, we're in a downtrend. This falling wedge, by the way, if you draw this thing a couple different ways, I don't think this is the wedge. This is the one people are trying to draw. The bulls are trying to draw this great big wedge with a huge target. But see, it doesn't line up all that well. I can give them the benefit of the doubt and say, this is the wedge, and look how perfect the touch was, right? So if that is the wedge, look at this. That's about a $900 wedge. If we break out of that thing and pump up $900, look where that would put us. Right here, about $700 if we break out right here. Break out today, okay? But if we break out over here, there you go. $900 puts us where? Puts us right there at the top of this downward channel. So do I think a break north is possible? For sure, I think a break north is possible. I absolutely think it's possible that we break north out of this wedge. And that's the reason that I would be very hesitant to take any huge short positions unless they started as a day trade and then they got converted into a swing trade. It's entirely possible this thing will go back up and test the top of that downward trend, okay? I don't think it's likely, but I do think it's possible. Your moving average on the 200-day is still up around $9,300. You got to remember that, right? $9,300 is that 200 moving average. So again, if we went up there, right, this moving average will curl over like this. This would go up like this. It would be a bearish retest of the trend and also the 200 moving average, okay? That is what got me in so much trouble, was when I gave up on the idea that we were never going to retest this. I kept saying for a month we needed to retest it, and then it took so long that I was like, shit, I guess we're not going to retest it. So then I went short and got smashed, right, on this retest, which I didn't expect it to go that high. I just thought it was going to go here, okay? So now we're sitting here, and look at what we've been doing. We've been grinding sideways, right, for about 20 days, about 3 weeks. Same thing we did here before dumping. Same thing we did here before pumping. We're just consolidating, okay? So it could be that we get the big pump or that we get a big dump. Now, what I don't expect to happen is this to just grind down like this. No, I think it's going to break. I think eventually this rubber band is being pulled tighter and tighter, and it's going to break. It's either going to break north or it's going to break south, and they're going to be violent. The reason they're going to be violent is because if it breaks north, you're going to start getting a cascading wall of stop losses where they're buying Bitcoin, right? The shorts are being stopped out. If it breaks south, you have a ton of people who have set this neckline as their stop loss, right? They put stop losses just below this neckline. So if it falls underneath it, it starts triggering those stops. Well, guess what? We're just flirting with that area. If we break north, we're going to break this neckline. Those stops are going to get triggered, and all these people who are long, they're going to start selling because their stop losses are going to get hit. And then you're going to get one of these monster red candles like this. Just dun-dun-dun-dun-dun, right? It's going to be fast and hard, in my opinion. So that's kind of what I'm saying on Bitcoin right now. I haven't looked at the 3-day chart. We can just take a super quick peek. I think we had a 3-day close yesterday. Let's look at that real fast. So how's RSI look? We did have a 3-day close. This is a brand new candle that started today on the 15th. So our M that looked like it was going to try to turn up and ping this red line up here, it didn't happen, right? It went further south, and so now we have this very, very picture perfect M. Boom, there we go. I haven't talked about the volume profile in a while, so I'll just quickly mention it. Remember, guys, we have a gap right here. That's a volume gap. It's down around $4,500. We have this big old gap right here. This one's down around $1,300. Okay, so both of those are viable targets for this particular bear market. All right, we are finding a lot of support on this big old candle here, which is great, right? If you're a bull, but again, if we break south, we're going to want to fill in this gap, which is down around $7,000, and then I doubt this holds. I think we'll just go down and fill in this gap from there. Okay, so that is the 3-day chart. Weekly chart, you know, it's going to be more of the same. We don't need to talk about it today. One thing I will mention, if you start looking closely at this RSI on the 3-day, let's put a horizontal line on it. Look at this. Where did it find support? It found support right here, around this 44 area. Back here, acted as resistance, resistance, support, support, right? Resistance. So this isn't as clean as this red box, but this is an area that I would consider has some type of support / resistance property to it. And if you look, we're trying to come down and touch that thing. Okay, so it's important to realize that there may be some kind of dead cat bounce off of that line if we get there. And again, that would make sense because that would go up and test the top of our channel that I just talked about, and it would also put in one of these nasty M's like we put in this 2018 bear market. Okay, or this could be more like this. We have the big pump, the down, the smaller high, and then down. So anyway, that's kind of big picture stuff on Bitcoin. Like I said, on the smaller stuff, I'm going to be watching to see how it acts. First off, if it gets up to the 61.8 Fibonacci level, also be waiting to see how it acts if it gets up to the 200 moving average on the 4-hour chart, which is this orange line here. It's around $8,693 currently. Okay, RSI looks like it's trying to turn up. That's normally a bullish sign, so got to be careful getting too overexcited about shorts. But on the hourly, it looks like it's having trouble getting over this level right around 59 to 60. So that's another sign that I'll be watching. Okay. On the altcoins, I didn't look at the altcoins yet. Let's take a look at them together. So Litecoin had a nice little pump. That's normal with Bitcoin. Let's just take a look at. Here. Let's look at this today. Again, altcoins work just like Bitcoin, guys. This was a Fibonacci level drawn from the top over here in September at 422 down to the swing low. The 61.8 Fib, or the golden short zone on EOS, was 356. And you see that it got up inside the box here and now it's down. So, for somebody that had opened a short in there at that level, depending on your stop loss, you might have got stopped out, right? Realistically, it went up about 3.3%. But if you were still in that trade, you'd be up about 3.5%. And at one point, you would have been able to take profit down here around 7%. So Fibonacci levels, they're awesome. This is our line chart on Bitcoin. Let's not talk about Bitcoin again. We already talked about it. Let's look at, let me just kind of look through these charts real quick, and then I'll do an analysis. I don't want you guys to have to watch me for 10 minutes go through alt charts. Bear with me. All right, so yeah, I was looking through a couple different alt charts. They look pretty much the same. Not a lot's changed on the alts. If we take a look at this is our daily chart. Again, we don't know for sure whether or not this was just a bearish retest or whether this is actually the start of a new bull run on these altcoins. The 200 moving average on alts, as far as total market cap, it's up around 83 billion. So we are underneath it. So technically that is still bearish. And not only is that bearish, but this 200 moving average, you can see that it's actually starting to roll over. And what that means is it's now moving, it's declining, right? You want to see an ascending 200 moving average to be in a bull. When you have a declining moving average on the 200 daily, that's a sign of a bear market. So over here, it was up around 84 billion, and now we're down to about 83.8. So it's just now started to decline. That's a really bad sign for alts, okay? So again, I'm not going to be jumping in any long positions on swing trades with alts, right? Maybe some day trades. There's always some good day trade opportunities on alts. If you're stacking Bitcoin, of course, I do believe that they're going to gain some ground versus Bitcoin. I think they'll gain some Satoshi value in most cases because they're so oversold, whereas Bitcoin is still not really oversold yet. Okay, so a lot of these alts and Bitcoin pairs are going to start seeing some bounces A lot of them are already seeing bounces versus Bitcoin. Okay, so yeah, alt's not looking real healthy. So. Alright guys, so that's everything I have for you today. Please remember I am literally some guy sitting in a spare bedroom, so nothing in this video is financial advice or trade advice. You should always do your own due diligence before making any type of investment in cryptocurrency. If you enjoyed this video, please be sure and give it a thumbs up and subscribe to the channel. If you haven't already, you can check the description for links where you can follow me on TradingView, Twitter, where you can join my free Facebook group, and there's also some links down there where you can support the channel if you choose to do so. This is James with Crypto Common Sense. Trade safe.